Oh, hey. You ready to do this? Let's take a look at the Form 1040 Individual Income Tax Return together. Here it is. Form 1040, the Individual or Personal Income Tax Return. The form that every individual files every year. You might be shocked to find out that it's only 2 pages. The reason you probably have a tax return or two that has dozens, if not hundreds of pages, is because behind those 2 pages are all kinds of supporting schedules and details. But the main form has just 2 pages. Remember, this form is due every year on April 15th, but you have a 6-month extension available to you if you need additional time to organize your documents. The 6-month extension is not an extension to pay, it's an extension to file. So interest and penalties will accumulate every day that you don't pay in your taxes after April 15th. So let's look at these 2 pages and break them into smaller chunks so that they're more palatable. At the top of the form is your filing status. Depending on whether or not you're married, at 12/31 of the tax year, you'll choose the filing status that best describes how you want to file. First option is single, then married filing jointly if you were married, even if for 1 day of the tax year, and want to combine your income with your spouse. Married filing separately is an option if you and your spouse just want to keep your income and your filings and your taxes paid completely separate. Head of household is an option if you're unmarried at 12/31 of the tax year and you paid for more than half of the cost of keeping up your home for the year, and if you have a qualifying person living with you for more than half the year. So the qualifying person can be a child, a girlfriend's child, or a parent. This filing status is more favorable than tax rates for a single filer. Lastly, the final option of filing status is a qualifying widower. The year your spouse dies, you'll still file married filing jointly. However, for the 2 years following the death, you may use the filing status qualifying widower. After that, you must file using the filing status single if you're not remarried. So the filing status choice sets the stage for the rest of the form's calculations. Everything from the standard deduction to the child tax credit to the actual tax rates and credits depend on which filing status you choose. Next up on the form is your name, address, social security number, and whether or not you want to contribute to the presidential election campaign, and whether or not you have any interest in cryptocurrency. If you're married and filing jointly or separately, your spouse's name and social security number are also required here. For obvious reasons, the IRS wants to know where they should contact you should they need to. So it's always best to put a current address on your 1040, regardless of whether or not you live there for the entire tax year. The presidential election campaign question was added to the 1040 back in 1966 to help finance the public funding of elections, primaries, and the national party conventions. Checking this box actually doesn't affect your refund or tax owed at all. Just triggers the IRS to put $3 of tax money into the presidential election fund instead of having the $3 sit at the IRS with the rest of your tax money. The latest addition to the Form 1040 is the question about virtual or cryptocurrency. In 2019, the question was hidden on Schedule 1, which doesn't apply to all taxpayers. But as cryptocurrency becomes more and more popular, the question has moved to the front of the 1040. Likely for informational purposes, but potentially to ensure that the tax reporting of these transactions is handled properly. Next up is the information about dependents. First, whether or not you can be claimed as a dependent on anyone else's return, and then information about your dependents, if any. Their name, social security number, relationship to you, and whether or not they qualify for either the child tax credit or the credit for other dependents, like a parent, girlfriend, etc. To round out page 1, it's all about collecting information about income and capturing any deductions you have. We'll talk more about specific schedules in later topics, but as you can see, going down the lines, Line 1 is where you put your W-2 income, which is income that you received from an employer that's had taxes withheld. Line 2 is where you put any interest received from personal accounts, whether they be bank accounts, money market accounts, bonds, investment accounts. Line 3 is for any dividends that you receive from investment accounts. Lines 4 through 6, you hopefully won't have to worry about for a while. They deal with income from IRA distributions, pensions, and annuities, Social Security benefits, all things you probably won't have to deal with until you're at least 65. You're looking great, by the way. Line 7 is where you'll report gains or losses from the sale of assets. So what are assets? Assets can be stocks, crypto, houses, baseball cards, Pokemon cards, basically anything you purchase with the expectation that it might increase in value. The detail of these transactions gets shown on Schedule D. It's important to remember that if you hold the assets for 365 days or longer, you pay a more favorable tax rate, less than your ordinary income tax rate. Line 8 is the catch-all for everything else. It feeds from Schedule 1 and includes income from alimony, business income from sole proprietorships, single-member LLCs, income from rental real estate, partnerships, S corporations, unemployment, so much. Line 9 totals up all income items from lines 1 through 8. It just adds it all up to get to your total income. Line 10 is where we start to reduce your income by some deductions. 10A takes into account educator expenses and self-employed health insurance if you're a sole prop or single-member LLC who pays for their own health insurance. This is also where you get to deduct your traditional IRA contribution, student loan interest that you paid, and any tuition that you paid during the year. The sum of all these deductions gets input on line 10C, which is then subtracted from your total income. So line 11 shows your adjusted gross income. And this is a very important line. Your AGI is what will be used by banks to determine if you can get a loan from them. Your AGI also determines whether or not you're eligible for certain tax credits that are available. Line 12 represents the standard or itemized deduction, which will be discussed in the next lesson. But it's worth at least $12,400 to you, so the government allows you to have $12,400 of income that is never taxed. If you file jointly, the standard deduction is doubled to $24,800 of untaxed income. Line 13 is new as of tax year 2018. The qualified business income deduction allows you to reduce your business income by up to 20% if you own a pass-through entity. These are sole proprietorships, single-member LLCs, partnerships, and S corporations because they all pass the profits to the owners individually. Line 14 puts those two deductions together to figure out what your total deduction is for the tax year. Line 15 subtracts your deductions from your adjusted gross income to get to your taxable income. This is your taxable income, which is the amount used to figure out how much ordinary income tax you owe the IRS in a given tax year. Line 16 will be the total of tax owed based on your taxable income. Remember, the IRS does not apply a flat tax to your income. The gradual increase in tax rates only affects the next dollar of income you earn. It doesn't apply to your entire taxable income amount. Take a look at this tax table to visualize that. Line 17 will show any additional taxes that you owe based on your income earned. The most common one we see here is the alternative minimum tax. Line 18 will total up your tax owed. Line 19 will show any credits for children or other dependents listed on the front page of your tax return. Remember that credits directly reduce the tax you owed. We already calculated the tax that you owe, so credits just reduce that amount dollar for dollar. This is where the tax savings from having children comes into play. Line 20 will show any additional credits for childcare, education, retirement savings, electric vehicle purchases, and more. Line 21 will total up all credits that you can use to reduce your tax amount. Line 22 will show the difference between the tax calculated on line 18 and the credits available to you on line 21. Line 23 will show any other taxes owed. The most common tax here is the self-employment tax, which represents Social Security and Medicare taxes. Sole proprietorship, single-member LLCs, partnerships, these are all entities subject to self-employment tax. Line 24 will show the total amount of tax you owe the IRS for the calendar year after all credits and deductions are taken into account. Line 25 shows the amount of withholding that you had on your W-2 or 1099. Since you've already paid in tax during the year, this is where you get credit for all those payments. Line 26 shows you the total amount of estimated tax payments that you made during the year. Similar to paying in via your W-2 paycheck, this is where you get credit for those tax payments that you've already made. Lines 27 to 30 show some additional credits, some of which are refundable, but they're not used very often. Line 31 totals a few more credits from Schedule 3, and line 32 adds up the refundable credits from lines 27 through 31. Line 33 totals up all payments made from lines 25D, 26, and 32. Thank God we have computers to do all these calculations. Deep breath. We're almost at the end. Now that you know the taxes you owe for the calendar year and how much you've already paid in, you'll be able to figure out if you owe the IRS a balance, if you want a refund back into your bank account, or if you want to just roll over your refund to the next year. Depending on your situation, your first quarter estimate for the next calendar year is due on the same day that your tax return is due. So instead of getting the refund back in your bank account and then immediately paying in a tax estimate, a lot of taxpayers who are self-employed just like to have the refund applied to next tax year and treat it as if it's their first quarter estimated tax payment. The last bit of information the IRS needs to know about you is your occupation and also who prepared the tax return if you used a tax preparer. That's it. It's not too bad, right?
Hello.
Remember, this tax return is used by every single taxpayer. So there's a lot of information in lines that you'll never, ever use on the return. It's important to understand the key numbers, what they represent, and why they matter. But don't get overwhelmed with all the details, like knowing the tax rates for each filing status, understanding the phase-outs of certain credits. As long as you understand the basics of what you're taxed on and how, you are way ahead of most other taxpayers in the United States.